Crazy price action right now in the silver market and the gold market. We're going to dig in and explain what is going on and what we can expect as we move into these next couple of weeks. But oh my gosh, I'm shocked because everyone that I'm hearing speak regarding what we should be expecting over the next few weeks said nothing is going to happen really in any of the markets till we get through the elections. And what we're seeing this morning in the silver market in particular so far is nothing short of spectacular. Initial reports that I'm hearing, I listen to Phil Stribel from Blue Line Futures. He puts out a great video every morning. He's been a guest here in the basement. He's a regular guest on CNBC. This guy's super smart, and he says there's two things going on. Number one, there was a big report out of, guess where? China. Nobody's impacting the precious metals prices right now like China. But there was a big report about copper and the LME, the London Metals Exchange, inventories of copper dropping. Remember, guys, silver is a monetary metal. It will follow gold, but it's also critically an industrial metal now as well. So it has this cozy little relationship with copper. So the copper price is up. This news out of China on the second front, there's another piece of news out of China that now they're announcing they're going to do more stimulus. And people think this is how it all works out, right? Follow me on this, that if Donald Trump is elected as president, which I believe, I guess it's who you want to believe, but it sounds like the betting odds at this point are at least that Donald Trump will be elected, that the Chinese will have to implement even more aggressive stimulus because of all the tariffs that he's talking about. And again, when the Chinese stimulate, when they print money out of nowhere, that is very, very good for silver and gold. But what about $36 silver? Don't you worry. Don't you worry. Buttercup, we are going to check the silver price in just a few minutes, but let's talk about $36 silver right now as we're speaking. Let's go out to our friend, the Oriental Ghost. Uh-oh, wrong screen. Here we go. We're going to come back to that one because that's also exciting. Here is the data from the Shanghai Gold Exchange. And the only reason that we emphasize the high is because, as we can see here, right, the silver price is always higher in China. And it's so interesting because the Chinese market is a physical market. We're going to talk about JP. Oh, we're going to talk about the Fed, too. We got a lot. And we have a special guest joining us, Brian from Mountain Bullion Entertainment. Buckle in, guys. Seriously, we got a ton to cover. But the Shanghai Gold Exchange is a physical market. There's AG. This are the closing numbers from last night. Here it is in U.S. dollars, $36 physical silver in China. Okay, now it gets even crazier when we go down or we go back up to what the Oriental Ghost, and this guy is always on it, always knows what's going on, direct from China. Gold is all-time high again in the night trading on the Shanghai Gold Exchange and the Shanghai Futures Exchange. I can't read any of this. I can't read Chinese writing, or I don't know what they call it. They're beautiful, those symbols. This is probably, I think it's per gram. This is their price. Anyway, we're going to believe him in that we have a new all-time high on both the Shanghai Gold Exchange and the Shanghai Futures Exchange for the gold price. All-time high gold. Silver. What's silver doing? You guys want to run out and take a look at the silver price? Because earlier it was up and up quite strongly, I think we can say. Let's go out to channel sponsor Pimbex, and we will press the magic button here and get an update on the silver price. Wow. 83 cents per ounce. Let that sink in for just 1 second. Unbelievable. I'm shocked. I'm flabbergasted. How do you feel? I mean, this is not supposed to be happening. We have silver at $34.52. Guys, we'll get into that later. First, let's say thank you to channel sponsor Pimbex. Without their financial support, Ron's Basement, our community, right, us basement dwellers, wouldn't be possible. So thank you to Pimbex. What I feel so great about having Pimbex as a sponsor is because of a number of key factors. Probably the biggest is how they've treated all of us, all of the basement dwellers, all the people that have gone and checked out Pimbex, talked to the brothers that own the company, bought physical metal from the company, I've received overwhelming positive response. And that's because they always have ultra competitive pricing, a great selection, and the number one thing, the foundation before you ever, whether you buy it from Pimbex or any other local coin shop, bullion dealer, you want to work with people that you know you can trust. And I feel 100% confident from my perspective of saying that I trust Pimbex. I worked with them. I bought metal from them before they even sponsored Ron's Basement. 83 cents per ounce in the silver market. Wow. 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 What was that price again? Hold on. Let's run out there and look one more time quickly, because we talked about this and everyone has talked about this. There's the debt clock. Yes, guys, that once we got above 32.50, once we got above 34, 35, we're still in a big battle, but that it's clear sailing to 44, 45, $50 per ounce silver. Now, look, I don't have a crystal ball. You and I both know, unfortunately, 3 weeks from now, we got a lot of unknowns, uncertainty in the future here in the next few weeks. We could be talking about a lower silver price than where we are now, but it sure feels like, based on everything that we know, that the silver price truly could break out into that $40, $45 per ounce range. It's going to be super interesting to watch. And we know there just aren't any people. We're essentially at an all-time high. We are at an all-time high for silver in my book. Yeah, sure. We hit $50 in 1980. We hit $50 per ounce in 2011. But if you look at a long-term chart of the silver price, it's clear as day that over the last 50 years, we've only been above where we are for maybe, 11 months, 13 months or something like that. So essentially, there's very few people that have bought silver higher than where we are today that would want to sell when the price hits $40, $50 per ounce. Very, very few people. That means there's not going to be a lot of supply coming on the market. And we know the level of interest right now in the precious metals continues to explode. By the way, my level of interest in you is exploding. Thank you for being here. Thank you for being a part of the basement. I appreciate everyone who's subscribed to the channel, gives the video a thumbs up, super chat, super thanks, PayPal donations, never, ever, ever expected, always much appreciated. And please never donate any money that you can't afford. Okay. That's critical. Everything here is free. Donations are nice, but again, not expected. Okay. Let's move on to, there's so much happening. But the whole point of this video was that they're going to end the Fed. Are we going, the Fed, the Federal Reserve, right? Remember, let's remember something very critical about the Federal Reserve. The Fed in Federal Reserve is no more federal than the Fed in Federal Express. The Federal Reserve is not part of our government. The Federal Reserve is owned by a bunch of private banks. There's some arrangement where they report to Congress, blah, blah, blah. But at the end of the day, they're bought and sold by the big banks. The Fed is not your friend, right? They make this out of nowhere. And don't forget, right? Their stated objective is for this to only lose 2% of its value per year. If you're an average middle-class American who doesn't have a big real estate portfolio or whatever, stock portfolio, they only want you to lose 2%. Now, we know that the real numbers are much, much higher than that, but the Fed is not your friend. And is there? There is. This is a fact. There's growing support to end the Fed. Let's dig into this because it's very interesting, right? No more money printing for you, Jerome. Very, very interesting. Let's go out to Zero Hedge, and they are pointing out some astounding facts about make sure we got through all that. Where is it? Here it is. Okay. The revolution continues. The ranks of anti-Fed Republicans are growing. Okay. So what they're telling us here is they're talking about Ron Paul, 12th year anniversary of his retirement from Congress, but his legacy continues to display itself on the political scene. There's Ron Paul. There he is with his in the Fed. Hey, Andrew Jackson and Thomas Jefferson are smiling. What's that guy? Hamilton, the people that wrote the U.S. Constitution. Less obvious, however, has been the growing political support for one of Dr. Paul's greatest priorities, ending the Federal Reserve. And guys, let me look you in the eye, because this is so, you are not anti-American if you want to end the Federal Reserve. You're actually more of an American patriot if you stand against the Federal Reserve. Thomas Jefferson, Hamilton, all those guys are smiling on you because the Fed is evil. I'm sorry, right? Read the books, study up on it. 99% of the American people are clueless what the Fed even does and how the Fed has taken actions which have really made life much more difficult for the average American. But what you got to remember about the Fed is the President Woodrow Wilson, who signed the legislation to create the Federal Reserve, he is on record. We've got a picture. I don't have it pulled up today, but 2 years after he signed the legislation to create the Federal Reserve, he said, "I'm the most unhappy man. I have destroyed my country. I didn't realize that I was selling my countrymen out to the interest of big banks and corporations." Okay, now let's go back to what's happening. These are unbelievable developments right now happening in our country in regards to the Fed. It says, as an illustration of this movement to end the Fed has seen most obviously in the bill itself. In 2012, okay, Dr. Ron Paul, during his last term in Congress, his In the Fed bill didn't have a single co-sponsor. So in 2012, when he put forth the legislation to end the Fed, nobody got on board with him. Zero, nilch. In 2024, introduced by Thomas Massie, the bill now has 23 co-sponsors. Okay, and it lists the 23 co-sponsors there. And on top of that, in this past year, another new precedent was set with Mike Lee. He's the first senator to introduce the bill into the upper chamber. And let's check this out. Hold on here. Make sure I got you on the right screen, which I do. I believe he's from Utah. Yeah, Mike Lee, a United States senator for Utah. Okay, here's a press release. Breaking the bank. Senator Lee introduces bill to abolish the Federal Reserve. We have senators proposing to end the Federal Reserve. We have 23 congressmen and women proposing to end the Federal Reserve. And we have a growing chorus of American people who are educating themselves, a lot of them from the silver and gold community, a lot of them from the cryptocurrency community, right? We won't go into a crypto debate, right? A lot of crypto people and precious metals people. It's interesting. We share all the same foundational beliefs, but man, when it comes to either crypto or precious metals, that can create a real street fight. But nonetheless, right, we have senators, congressmen, and now we have more and more people. We got the Costco dads. Hey, Don Howe, thank you for the super chat, my friend. Let's pull him up. Good to see you, Don. Good to see you. Welcome to the basement. We're going to have Brian here from Mountain Bullion Entertainment. In about 10 minutes, he's supposed to join a special guest, and he has some crazy, interesting facts to point out about the silver market, silver supply. We're going to get with him as well. Let's get Don off here. All right. Yeah, so it's not just senators, congressmen. It's now the Costco dads. People are buying gold at Costco. They're going to wise up. They're eventually going to realize they want to buy it from a specialist, from a company like Pembex. But for now, it's a great gateway to get new people into the precious metal sector. It's going to be absolutely crazy. Man, there's so much to cover. What about JP Morgan? This is funny. JP Morgan, it's not funny, was convicted for decades, right? The world's biggest bank, blah, 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 of manipulating the silver and gold price, tamping down silver, bragging about it. These traders, spoofing. We've gone through it all. It's a big, big issue that's occurred over the last number of decades. I thought this was humorous. I don't know if you heard about this, but JP Morgan had a little trouble, was it last week or 2 weeks ago? There was an infinite money glitch. CNBC, JP Morgan began suing customers who allegedly stole thousands of dollars in the infinite money glitch. So what this was they had some problem with their ATMs where people were able to just write a check for whatever amount they wanted, hundreds of thousands of dollars, deposit it into their account, and then withdraw the money. But JP Morgan forgot that critical thing was to check that that the bounce was or that the check was not going to bounce, which they were. Okay, so JP Morgan has begun suing customers who stole thousands of dollars from ATMs by taking advantage of a technical glitch that allowed them to withdraw funds before the check bounced. Okay, they filed suit in 3 federal courts. A Houston case involves a man who owes JP Morgan $290,000. He got him good, wouldn't you say? I don't know what he bought with that. Maybe some silver and gold. Who knows? I digress. After an unidentified accomplice deposited a counterfeit $335,000 check. So somebody put a bad check into this guy's account, and then this guy was able to take out. This is not what's funny about it, okay? So the infinite money glitch, it was a TikTok video that spread like wildfire. And people had for 2 days were doing this, okay? Here's what JP Morgan says. On August 29th, a masked man deposited a check into the defendant's Chase bank account in the amount of $335K. After the check was deposited, the defendant began to withdraw a vast majority of the ill-gotten funds. So what I'm thinking is this infinite money glitch. I'm thinking, did these people, did they suddenly, now they know what it feels like to be Jerome Powell at the Federal Reserve. I think Jerome Powell has an infinite money glitch, right? As long as they're not abolished, as we've talked about this movement coming forth, right? Suddenly this guy in Houston must have felt he was the new Jerome Powell. JP Morgan, the biggest bank by U.S. assets, is investigating the infinite money glitch, although it hasn't disclosed the associated losses. Despite a waning use, this is interesting. This tells us how the bank feels about going to digital. Despite a waning use of paper checks as digital forms of payment gain popularity, 26 billion in fraud every year. Now, what I really thought was funny about this is JP Morgan is seeking the return of the stolen funds with interest and overdraft fees, as well as lawyers' fees, and in some cases, punitive damages, according to the complaints. It'll be a wave of legislation. This is what cracked me up, okay, this is JP Morgan's quote. Fraud is a crime that impacts everyone and undermines trust in the banking system. That's according to JP Morgan spokesman Drew Pussy Terry. He said that in a statement to CNBC. And what I'm thinking about, Drew, right? I have a question for you. Does that apply to the precious metals market? Fraud is a crime. Drew, does that apply to how you rip people off with 26, 27% interest rates on credit cards? I mean, is it okay for fraud's okay as long as JP Morgan? I mean, come on, everybody knows, it's been well documented. JP Morgan has ripped off people for decades, whether you're a precious metals investor or even somebody who's paid a 25, 24, 28% credit card rate. That's highway robbery. And we know, I guess from a legal perspective, they were convicted of fraudulent trading activity, spoofing. They sent a couple traders to jail. So I guess my question is, I'm not supporting what these people did, right? I don't like fraud on either side, but I thought it was pretty funny that JP Morgan's got their undies all in a ripple because somebody figured out a way to create an infinite money machine. And I still think it's pretty not humorous, but that these people, that they turned themselves into some miniature Jerome Powells from the United States Federal Reserve. What do you guys say we bring on our friend Brian from Mountain Bullion Entertainment? He's got some interesting things to talk about this morning. Let me put my ears in and see if we can get Brian up here on stage. We're a few minutes early. Brian, can you hear us?
Good morning. Yes, I can.
Hey, good to see you, buddy. How you doing? What do you think about JP Morgan being upset? I don't know if you heard about people figuring out a way to rip them off a little bit.
I think it's pretty interesting, especially that it was such a big deal. $26.6 billion. That's pretty impressive. Yeah. It almost makes me wonder if JP Morgan had allowed this activity to go on just to create an environment where people are desperate because they don't want to go to jail to conjure up this money for them with interest.
Yeah. Yep. It's in poor JP Morgan. They don't mind fraud when they benefit. But
Right? Yeah. Now
if
the shoe is on the other foot.
yeah, when they're on the receiving end, they don't like it so well. So what's going on? You've got some interesting, would almost say stunning data you wanted to share about the silver market. What are you seeing right now going on with silver, Brian?
Well, there's a lot going on. It's great to be here with you this morning, and hello to all the basement dwellers.
Yep.
I'm not sure if you'd like to pull up that first slide that I'd sent you from Bullion by Post.
Let's pull that up here. Hold on. See if I can pull this off. There we go. Is that it? There it
Yeah,
is.
no sweat.
Yep.
Yes, that is. Thank you very much.
Mm-hmm.
As you can see in this article, if you took all of the silver that had been mined throughout history, and let's just say you put it in bar form and you stacked it into a cube, that cube would be roughly 55 meters on each side. Now, if you look at the sentence down at the bottom, right under that cube, you can see that about 49% of the total silver mined has been lost or destroyed. Now, this is based on numbers that came out of the CPM group. Those are the numbers they used for this article.
Mm-hmm.
And it's likely that even more silver has been destroyed than that.
Hold on, Brian. Brian, hold on. I'm having technical. There you are. Okay, you're back. Sorry. Repeat that last sentence. I actually pulled up your YouTube channel in the background, and you were talking twice at the same time.
oh yeah, no sweat at all.
So wait a minute. You just told me that all the silver in the history of the world that's ever been mined would fit inside of a cube that's about 55 yards by 55 yards by like half of a soccer field or half of a football field, and then 55 yards high. Is that, am I reading that correctly?
Yes, that's correct.
Okay.
And this is based on information coming out of the CPN group that they put into this article.
And they're an authority, no doubt, right? Jeff Christian, no doubt.
Yeah. Well, now you might want to take some stuff that he says with a grain of salt, but they are an authority of the industry.
Yeah.
Now, if you look down at the sentence at the bottom there, it is estimated that about 49% of the total silver that's been recovered has been either lost or destroyed. So this cube would actually be smaller than this. And then I also would just like to mention, it had been pointed out by the Silver Academy that they don't track silver used by militaries. So, when we bombed the Houthi rebels with tomahawks, for example, all of that silver that got destroyed, it was not accounted for.
Mm-hmm.
That's just one example.
Yeah, well, Andy Scheckman says on good from a great source that there's 500 ounces of silver roughly in each Tomahawk missile. And then listen to this, Brian, because I think this blew me away. I saw a congressional report from 1942, so almost 100 years ago, during the onset of World War II, that there was a report to our Congress that they were estimating back then that the military was going to need 200 million ounces of silver per year to fight World War II. I mean, that was back then. I would imagine they're possibly using more silver now. I don't know.
That is a lot.
Mm-hmm.
And you figure if we're already looking at about that amount in a deficit over the last few years, we'll probably be looking at a little more than that for our deficit this year, probably more like 215 million, I think is what it was.
Mm-hmm.
And if they're not accounting that, I mean, does that mean that our deficit's actually closer to 400 million ounces,
Well, and you're saying, so all that silver, that 55 meter cube, and then about half of it has been lost to probably photography over the years. That's what it was used a lot in during the 50s, 60s, and 70s, and just other industrial uses. So half of that silver is gone. And then I think it's critical for our viewer and us to realize too, that of that silver that's left, that is a finite, that is a static number, right? It can't be printed. And we know that every year, because of the deficit, that above ground resource is shrinking and shrinking and shrinking. Nobody knows for sure how soon it'll shrink or when it'll get to zero. But we do know that it's a set number and that it's getting smaller, and it will eventually, if the deficits continue, at some point get to zero, right? Does that make sense?
Yeah, absolutely. It's just going to continue to dwindle. There's only so much of it out there. And then another thing to consider is there's only so much of it in investment grade form. A
Mhm.
lot of silver has been used to make jewelry, for example. So this isn't silver that would be considered like good delivery silver
Yeah.
for the LBMA or for the COMEX.
Yeah. Well, because and I appreciate you pointing that out, because I think we don't realize how delicate and sensitive the supply of silver bars, silver coins, the quote unquote investment grade, how really delicate and sensitive it is. It is a really a sliver of the total silver supply out there. And we saw this during the C-19 crisis in 2020, where people were coin shops were sold out, online bullion dealers were sold out. We also saw it even just more recently, about 18 months ago, during the little banking crisis in March, April of 2023, right? Where premiums on American Silver Eagles, 1 ounce American Silver Eagles,
They got
were
crazy.
like $25. And then even junk silver, constitutional, 90% silver. I mean, it doesn't take a lot to upset the apple cart when it comes to especially investment grade silver.
No, it really doesn't take much at all to put much pressure on this market. I remember I had put in an order in that time period, and it took a long time for me to get my stuff.
Mm-hmm.
So there's really only so much of
Well,
it
that's
out
because they had to find a 40-foot trailer truck to deliver all that silver you bought. Right?
Yeah, I was filling up my vault.
Yes, exactly. Yeah.
So if you wanted to pull up that other slide, I just decided to make I mean, it's a pretty crude image here, but I did want to let people see what this would kind of look like. Now, this is based on average sized professional soccer field in Europe.
Uh-huh. Okay.
So this is the most common size that they are. They're 105 meters long and 68 meters wide.
Mm-hmm.
So if you took that 49% out of that 55 meter cube, you would end up with a cube that was 28.5 meters. If you can imagine that gray area being a cube, and that's it. That's all that there is, and that's
all the silver. Hold on. Wait a minute. You're telling me that's all the silver that is right now above ground in the world, but based upon the best data that we can assimilate at this point. Or is that go ahead?
Yes, that's correct. And I mean, it would probably be a little smaller from military use, but yeah, based on the data that we have, that would be it. That's all that we'd be looking at.
Brian. So you're telling me that, like, if I think of, I mean, look, I played soccer, so I know it's up, but let's say I think of a football field in 30 yards, right? That's easy to visualize, 30 yards in a football field.
Yes.
And then by another 30 yards, by about possibly 30 yards, that's all the silver. That's crazy to think about, that of all throughout history, all the silver that was mined, right? And then half of it or so was lost for use, whatever. All that's left right now could be in that roughly that 30 yard, rough by 30 yard by 30 yard. We don't realize how little silver there is. I mean, and part of it's sitting in your basement, I know. And I don't keep hardly any silver at my house here, but it's kind of crazy I am looking at an American Silver Eagle to think that my Silver Eagle's in that cube, right? Would that be safe to say?
Yes, that's correct. So everybody watching, this would include your personal stacks as well. Any jewelry that you own, it would be in there.
Wow.
Yeah, that's all of it. All the silver for all of the 8 billion humans on the planet.
Wow. All right, what else you got for us, Brian? You're the silver man. We love hearing from you.
Well, yeah, it's great to be out here speaking with you guys. Now, if you wanted to pull up that third slide.
Wow, we have another slide. You're prepared. This one here?
I'm sure. You know what? We could do that one.
Okay. Or do you want to do this one? We'll come back to that one.
Either one's fine.
Okay.
Either one's fine. So this is from a Sprott Money article from 2021. And you can see that about 21% of silver demand that year went into jewelry. And a lot of jewelry, has been made over time. Now, the thing with jewelry is, as stackers, that we need to keep in mind, jewelry usually has a markup of about 300%. So this is something that you can enjoy. And I'm not saying not to get jewelry or to get jewelry. This isn't financial advice, but when it comes to investors, they're going to get a lot more silver per dollar they spend with investment grade silver, with 3 or 4 nines fine bullion. So that's likely what they're going to go after. And not a whole lot of it goes into investment grade coins and bars. As you can see here in this chart, it's only about 18%.
Yeah, that's what caught my attention. Only 8. This was 2021, but I know it's roughly the same right now. That only 1 in 5 of every 1 in 5 of every ounce that is, I guess, demanded during the course of the year, only 20% of it roughly is going into coins and bars. Correct?
Yes, that's correct. And I think that this chart really lets us see, if you can imagine, if a whole bunch of people started piling in to silver at the same time, why the market can get cornered so quickly, like the examples you had given earlier.
Yeah, yeah.
Because
you got one. Yeah. You have one in, I don't have a voice. You have 1 in 5 people, or 1 in 5 ounces only going to the investment. And hold on one second.
Yeah, you bet.
And on top of that, we are in a different world right now than any other time in history when it comes to buying silver for your average retail investor, because news spreads so quickly, number one, right? And so we get these situations that pop up, and instead of hearing about it on the 5 o'clock evening news or at the water cooler at work, people get instant information. But what's even crazier, Brian, and why the inventories can get wiped out immediately, is because in 1980, when silver went to $50 per ounce, you had to get in your station wagon, drive to the local coin shop, wait in line to get your silver. Today, right now, you and I, in the next 5 minutes, could buy like 6 monster boxes of American Silver Eagles online. You know what I mean? There's no longer this like need to go to the coin shops are great. I'm not putting them down, but people are able to buy stuff instantly as well. They get the information instantly and they can buy stuff instantly. And I think that's why you get these like Sunday nights where the silver inventory gets wiped out over a weekend. We've had that a couple times, as I remember, in the last 4 or 5 years. It's a different world that we're living in.
Yeah, it can move so fast nowadays. And when you see like that mainstream article from CNN about gold, when you start to see more of these articles come out about silver, that could be something that we'd be looking at. Would be a few 100,000 people, maybe a few million people come across a couple of these articles or news stories, and if they all decide to go buy one weekend, they could wipe it out basically instantly.
Yep, and we don't even need that. I buy the silver I bought over the years is for a long-term generational investment. But the reality is that we've got this massive deficit. We've got a very delicate retail investment market that can get like wiped out in an hour or a day, which has proven to be the case. It's whether I'm looking at it short-term or long-term. I now that I'm talking to you and I'm thinking about the soccer field or football field, but I feel even better about the fact that I love silver, Brian. Thank you.
You bet. Absolutely. And what I think is important to bring up too is silver is unique, and replacing it might not be as easy as it seems.
Yeah.
If you can imagine today, virtually all electronic devices have a little silver in them. So it's in all of our TVs, our remote controls, it's in our computers and our smartphones, all of our phones. And it's not much. It's about 0.34 grams in each smartphone. But it's also in electric cars, printed circuit boards, and electrical contacts. So we're all using a little bit of silver to watch YouTube right now. It's in our computers. We're using it to communicate with each other. So it's in everything. And redesigning all of these devices to use something else would be very challenging for these companies. And something that the Silver Hermit had pointed out. This isn't something that they're going to want to do. So the price will need to move up a lot more before they actually try and do that. So the demand for silver in industry isn't going to go away anytime soon.
Before that's called thrifting, like they get thrifty and they try to reduce the amount of silver. And they tried that with solar panels, and from what I understand, it didn't work out too well. And we didn't even talk about solar panels or right, these new batteries that Samsung is apparently going to be rolling out in Toyota's Lexus brand. I think next year, it's that soon. These solid state batteries that the reports we're getting are going to use almost a kilogram of silver, or 30 ounces roughly. Yeah, is that right?
Yes, per battery. And those things are really cool. I mean, they're talking about a 9 to 10 minute charge time and a 600-mile travel distance for electric cars with those, which I think will really change the electric car industry. If you can imagine, driving for, I don't know, 6 hours or whatever, and you stop for 9 or 10 minutes at the gas station. That's a pretty typical stop at a gas station. You might use the bathroom, wander around, get some food and something. You'd come out and your car would be charged. So it'd be very similar to the gas-powered cars today. A lot of these electric cars, people have to end up sitting there for hours after only going 300 miles.
Yeah, I saw one of my neighbors one morning. I was getting donuts with my daughters at the grocery store, and he pulled up in his Tesla. I didn't even know it was my neighbor. And I'm like, that's a nice looking car. One of those older, like the Model S, the high end one. And I was like, I said, how do you like that Tesla? And he said, well, I really loved it at first. He said, but honestly, and he even told me, he expressed he loved it still, but he expressed some frustration. And he was like, when I go on a road trip, I have to stop and sleep in the back seat while the car's charging, right? And these new solid state batteries charge in like a fraction of the time. That's what I've heard, like 9 or 10 minutes. They're lighter, they go longer, and they're actually safer too, right? There's a problem with these electric cars and fires, the risk of that.
Yes, that's correct. I've seen a couple where people caught footage of them burning.
Yeah.
So
what about the Russians? Are the Russians coming for us, Brian? The silver? Are the Russians coming?
Yeah, yes, they are.
That's the biggest news story in the history of the universe for silver. The Russians are coming.
Yeah, that's a really big one. And I just wanted to make one more point on industry.
Now I'm afraid of the Russians, but go ahead. I'll let you go ahead.
I am I am very concerned about what they're doing. Just as an example, gold could be a good replacement for silver for electrical contacts.
Right.
But gold costs $2,750 an ounce. So they're not going to try and replace gold with silver for electrical contacts anytime soon. So I think silver has a very firm place in industry, and that demand for industry is going to stay there.
Let's look at the gold to silver ratio. Then we're going to get to the Russians. But this, are you showing on this chart here, like the average gold to silver ratio over some of the past years? Is that what we're looking at?
Yes, that's correct. So this is the gold to silver ratio over the last 20 years. And I drew a line in right about 55 to 1 for the gold to silver ratio. And I do want to say it's great to see silver breaking out or back over 34 this morning.
Yeah.
I know on days like this, a lot of folks can wonder where silver's price could go. And when thinking about silver's price potential, I like to look back over time and, look at charts like this. And I also like to consider the gold to silver ratio. As you can see, but by where I drew that line in the past 20 years, there's been a pretty decent amount of time that silver has been at or below 55 to 1.
Yeah.
And if it was at 55 to 1 today, that would make silver's price about $50 an ounce. Now, I'm not sure where gold's price would be, if when we get back to this 55 to 1 ratio, but it would probably be higher than that.
So that's a good point. I mean, right now, because I did it on checked it on my calculator as well. If we had a 55 to 1 gold to silver ratio, we would be at $50 silver. A 55 to 1 gold to silver ratio from any historic perspective, the last probably 20 years, 30 years, is not out of the question. It's actually very reasonable, and that would be $50 silver right now. But if you go back, and I'm not going to bore everyone by pulling it up, but I've got these long-term gold to silver ratio charts from like the Peloponnesians and the Roman Empire, and even up until, let's say, like 100, 150 years ago, the numbers were more like 8-1 or 12-1 or 15-1. Sometimes it was like 3-1, right? If it was 3-1, we'd have $900 silver.
Right. Absolutely. And I do like to say this when I come into the basement. When St. Louis was the king of France, the gold to silver ratio was 10-1.
Yeah. Yeah.
So that's something folks can think about when they join you in the basement. And of course, we see it that it got all the way down to 40-1 on this chart in the last 15 years. So I agree with your conclusion. The 55-1 is very reasonable. We could see it get down to 40-1. And you know, if it was at that ratio right now, that would make silver's price about $68.75.
Yeah. Yeah.
So,
It's not out. I think the key is it's not out of the question. It's not unreasonable. It's not crazy talk to say that we should have $50 silver, or that we should have,
right.
you know, these higher prices. People think, oh, you're a pumper, you're this. I'm like, no, I'm just looking at actual numbers, looking at the data. What about the fact that during the 1970s, right, which wasn't that long ago, I was alive, I'm not that old yet, but during the 1970s, silver went from $1.50 all the way to $50 per ounce. That's like, I don't know, 30 times, almost more than 30 times. I mean, it's not out of the question. And I heard somebody say something very interesting about that 1970s run, and it was, people like with gold will say, yeah, but you couldn't own gold until 1976, which blows my mind, or 75, when whoever, I think President Ford made it legal to own gold again, but you could own silver during that period. So that explosion in price was not because of this newfound ability for people to be able to own physical silver. You know, I mean, these returns, I know, and I'm not, you know, look, I mean, it seems crazy to think even $50 silver, I understand, feels like a little crazy, but when you just look at numbers and recent history, right? We're not going back to BC. No, not that long ago, right? And you know, but I think we've been so conditioned into this system over the last number of decades. I'll say that politically correctly. That to think that the silver price, or the, you know, I mean, you know, look at the price of Microsoft stock went up 10x over the last 15 years or more, right? Why can't silver go up 10x? I don't know.
Absolutely. We've been traumatized by the activities on the commodities exchange and the paper market, and so people don't believe it's possible, but these are facts, and this is from recent history, and this can happen. And one more little tidbit on the amount of silver that's available. They say that if you evenly divided all of the available bullion grades, so 3/9 finer silver, evenly among all people, everyone would get about one silver $50. That's about how much silver is available per person, about one half
in the world.
In the world. Yeah, if you divided it among all 8 billion people on the planet.
So less than a half ounce, basically.
Yeah, less than a half ounce per person.
Wow.
Just one of these per person.
Wow, looks like you got them beat.
I'm a little ahead of the power curve.
Yeah. So with everything going on, right, with the silver market, everything going on in the world right now, right, we get these major developments, big news a couple weeks ago from Russia. What did you hear? What did you read into this report that the Russian government, the Russian central bank, is not only going to be buying gold and some other metals, but also going to be buying silver?
Well, I think it's really interesting. For the first time, Russia has explicitly mentioned that one of the reserve assets it's going to be purchasing in its recently outlined budget is silver. The Russian central bank is planning on continuing to add gold, platinum, palladium, I believe, and for the first time, silver to their list. This isn't entirely unprecedented. In the past, the U.S. government has bought silver. The central banks in India and Mexico have previously held silver as reserves, but this is all new for Russia. Um,
And Russia is kind of the leader of the pack when it comes to obviously de-dollarization, development of the BRICS with the kind of their own payment systems, their own. I mean, it's hard to get a firm grasp on what's really going on. But what we do know is going on is that Russia and the United States are enemies at this point, and that Russia is, I feel like, kind of the de facto leader of the BRICS movement, which has explicitly stated they want to move away from the dollar. So when we hear Russia saying, oh, by the way, now we're going to start buying silver. Now, we don't know how much, and we don't want to overplay this or, get too fantastic about it. But when we consider all the aforementioned points, and then also consider that they explicitly said in writing that we are going to buy silver, that's a big deal in my book. That's a big deal for silver and silver investors.
Yeah, they're a big government. The IMF has recently upgraded Russia to the world's 4th largest economy. So depending on how much they buy, I mean, they could really cause the silver squeeze to get going, if they buy enough. And of course, they would have the funds to apply the level of pressure on the silver market needed if they chose to, to really cause the silver squeeze to break out.
Yeah. And you're forgetting something, Brian. You're forgetting something very important. Huh?
What was that?
The Rumex. Have you heard of the Rumex or the Romex?
Oh, yeah, the new exchange they're talking about.
Yeah,
I'm not too familiar with it yet, but that is really interesting.
Yeah, there's a Reuters article that they've explicitly have said now they are definitely going to start their own metals exchange, because basically they're fed up with the COMEX and the LBMA. They're fed up with how price discovery has been achieved within the metals markets over the last several decades.
Well, I think that that's going to make the Western governments really uncomfortable. They've had the power position as far as using the paper markets as a price setting mechanism. I think it's 797 million paper ounces that they're short right now. And so, that's almost a 1 year supply of silver that gets mined. They say it's about 850 million ounces. So that's an impressive amount of pressure that they're able to put on the silver market without having to have much exposure to the physical metal, or, whether it's in an approved vault or they're borrowing it from someone or anything like that. They just don't even have it. They estimate it's 408 contracts for every 1 ounce.
Yeah, it's crazy. Yeah, let's run out right now and take a look. We need to take our day. We got to go on a field trip, Brian. You want to come with us here?
Let's go.
We're gonna go out to the U.S. debt clock, and let's pull up that number that you just talked about, which is down here. Yeah, 409 paper to silver ratio right now is 409 to 1. There's 409 paper, unicorn fart dust, whatever you want to call it, make believe electronic claims on each 1 ounce of silver. That'd be like if you ordered a Big Mac from McDonald's and you showed up at the drive-thru to get delivery, and they said, "Sorry, we sold that same Big Mac 409 times." We didn't think you were really going to show up, Brian.
I like that example.
Yeah. Here is the other one I've been pointing out a lot. The dollar. I don't know if you've been following this. The dollar to silver ratio is now sitting at 945, and what that means is, for each 1 ounce of silver that's mined every year, that's produced every year, for each 1 ounce, okay, there's 945 paper dollars being created via the M2 money supply, which measures like bank accounts and money market accounts and all that. That's astounding, right? And that number's been skyrocketing. Last week, it went from like 700 all the way up to 900. And just like a year ago, there was all this fervor in the silver and gold community because that number was actually at 0 for a little while. So the government is massively expanding the money supply as of late. And unfortunately, they can't massively expand the silver supply at the same time.
That's a good point. I remember it being at zero, and there was a bunch of posts online about it, and people were talking about what it meant and everything. So yeah,
Yeah.
they have really
Oh
been
yeah,
expanding that.
it got huge play in the YouTube silver and gold community. You know, one more thing about Russia, I want to show you real quick.
Okay,
I discovered this the other day because we were talking about Russia with silver. So the U.S. Our debt right now is 35 trillion, which I want to remind everyone, one trillion is equal to a million times a million. So we've got a million times a million, 35 times as our national debt. But if so, we're at about, we'll say 36 trillion. If we got to the world debt clock, it shows all the different countries. And when you look at Russia, I pointed this out yesterday. Look at Russia down here. Now their GDP and everything is a fraction of ours as well. But just in terms of
sure.
debt, they're $435 billion in debt. That's like 1.3% of what we have in the United States.
Wow. So they're being a lot more careful with not letting their debt get out of control,
Yes. Yeah. Yeah. It's crazy. It's crazy.
managing their money much better. Maybe that's part of the reason they just got upgraded to the world's fourth largest economy, according to the IMF.
Yep. And all this BRICS development. Yeah, they're the IMF says but based on PPP, purchasing power parity. They also say that China's economy, by that, this is the IMF, China's economy is actually number one in that ranking. I think it goes China, United States, and maybe was India in there? It was three of the four BRICS, and then Russia as well. So it's getting crazy. You want to stick around here for a few more minutes, Brian, while we wrap things? Because I want to show some banking, some crazy data about how the banks, could potentially fail in this country. You got a few minutes to stick
You
around?
bet, absolutely.
Okay, hold on one second. Let me pull you up on the screen with this. I found this last night and it just blew me away. The amount of unrealized, make sure I got this up, which I don't. Here we go. Unrealized bank losses. Breaking news from Bar Chart. Okay, the US banks are now sitting on real estate losses, okay? Real estate losses of $750 billion as of the end of the third quarter. So as of September 30th, 2024, 750 billion losses. That is 7 times larger than the total was during the great financial crisis, which was brought on by a collapse in the real estate market. Is that shocking or what?
Yeah, that's very shocking, and it's really concerning. Um, a lot of this was started to come to the attention of the public when they were doing the rate hiking cycle, and
Yep.
they've only gone down 50 basis points or half a percent.
Oh
Since
no, I'm gonna really scare you, Brian, in a few minutes. But go ahead. You're
okay.
right. But I got something else that we need, that you and I and the viewer need to think about in that regard. And I'm sorry I interrupted you, but go ahead.
Oh yeah, no sweat at all. So some of these loans for these big commercial properties, these big office buildings that have these really high vacancy rates right now,
Mhm.
are still going to be they're going to need to be getting refinanced even in the time period we're in now. Occasionally it's going to come up, and the interest rates for them, they haven't gone down that much, not enough to make a difference at this point. Um, so,
Yeah.
so we're really in quite a pickle. I know a lot of folks felt like they should have kept raising rates for longer,
Yeah.
um, and that they kind of, capitulated probably to pressure from Wall Street and started lowering rates before they should have, just to stimulate the economy. But now, we could be facing higher inflation because of that. And then we're still going to have a problem with some of these big buildings. So it's really concerning.
Yeah, and you brought up a great point, okay? Because there's two big problems that the banks have. They've got their problems with their unrealized losses on their bond portfolios, okay? That's number one.
Good point.
Number two is what we just talked about. They've got big unrealized losses on these property loans. I mean, these buildings, there's one in St. Louis, the AT&T building. I mean, they're selling, some of these buildings are selling like for a nickel on the dollar because nobody wants them. There's just big empty building. What are you going to do with it? Nobody wants to rent it. It's just a big liability, basically. Okay. But you brought up a great point, Brian, and that is they can hide from the bond market, their bond portfolio losses. Right? They can hide from that.
Okay.
But they can't hide from the real estate problems because, as you brought up, and I'm so happy you brought that up, those get renewed. Those are usually 3, 5, 7-year loans.
Yes.
Those need to be refinanced. Okay, they're forced to refinance those. And at that point, as I would understand it, as someone who worked as an accountant, and I never really liked banking accounting, but I did study it, that they're going to be forced to recognize some of that 750 billion in losses over the night because it rolls, right? Like there's going to be a certain amount of those loans that need to be refinanced this year, and they're going to be like, oh crud, we loaned this guy 100 million on this property, but it's only worth 13 million now. We gotta, and all those will every day, more and more of that will be kind of manifested as they have to renew those loans. And I don't see the commercial real estate market getting any better. But on top of all those losses, there's massive losses on their bonds. And then there's something even crazier if you think about this on their bond portfolio, right? Because your bank took your money 3 years ago and said, thank you, Brian, for depositing $250,000 with us. And they took that money and they bought U.S. Treasuries at the time were paying 3%. And they thought, well, we'll pay Brian nothing and we'll make 3%. Everything's hunky dory until interest rates went up, at which time the value of those bonds went way down. Right. And so they're sitting on that. But here's the last point I want to make that is a reality of what's going on right now. Interest rates, I know everybody says, oh, interest rates are going down. No, interest rates have gone up by 0.5% over the last month. The 10-year Treasury bond has gone up from like 3.75 to 4.25. So that is going to exacerbate many of these problems in the commercial real estate arena and with these massive unrealized losses, because when interest rates go up, the value of bonds go down. You aren't going to walk into your bank. I always tell everybody, you aren't going to walk into your local bank. They're going to have a big placard up telling you about the platinum checking and the gold checking. They always name their checking accounts after precious metals, I've noticed. But anyway, they aren't going to have a big placard up saying, hey, we just want to warn you, our bond portfolio's lost 35% of its value in the last year. These banks they're hiding it. It's Disneyland. It's Disneyland accounting. The banking industry is living in la la land. I've heard somebody call it this back during the great financial crisis. It's Disneyland accounting. It'd be like you, Brian, if Grandpa Eddie or Uncle Eddie, you inherited $1 million from your wife's grandpa or uncle, whatever. And your wife said, here, Brian, do something with this. And you bought a bunch of stocks and whatnot. And they went down by 40%. And you're like, oh boy, we're in trouble. We lost 400 grand. But you're like, you just tell your wife, well, we don't have to worry about it. We don't have to worry about it till we sell it. No, it's real, right? Because if you wanted to sell, you'd have the loss, but you could just be living in la la land saying, well, everything's okay. Everything's great. And that's what the banks are doing, right? They're in la la land. But I digress. I mean, I've heard some smart people like Lynette Zhang and other people say basically all the banks are illiquid, right? I mean, they're broke, but because they can just kind of, meander along and not have to really recognize what the real problem is, they're able to stay afloat. And, as long as like that JP Morgan article I read earlier, as long as everybody has confidence and trust in the banking system, because the Fed will be there to save the day.
I guess if Ron Paul has his way, are the 23 supporters of that bill now, that might not be the case. Thank you for sharing your insight on that. And I do think that that's really important for people to realize, just because they're still sitting on it doesn't mean those losses aren't real. If someone bought, let's say, Dogecoin, that crypto at the peak of its bubble, and they're still sitting on it, well, the reality is they're not going to be able to turn around and sell it for $5 or whatever it went up to. They're going to have to sell it for the dollar that it is today. And so those losses are real. And when you, as you used me for an example, if my wife really put her foot down and was like, no, go pull the money out of that, then I would have to,
you would realize the loss. Yeah.
I lost a bunch of the money. Yeah. Yeah. It's only worth a
Right.
fraction of what it was previously. And so that's the position the banks are in.
Trust me, I've bought plenty of stocks that have gone down 40% over the years. Some have gone up 40%, but I've bought the ones that have gone down 40% over the years. And whether I've sold it or not, those losses are real. I mean,
Right.
they are. So,
Absolutely. And I really liked your example of the bank. They're not going to have a placard, and they're saying that whatever bank, had to deal with that AT&T building that you were talking about, for example, that had to deal with that situation. They're not going to tell any of their clients,
no.
oh yeah, we were the ones that had the loan on that AT&T building that lost, this huge amount of profit. They're going to keep that as quiet as possible.
Yep. Because the whole system is based on confidence. It's a paper money system. Real quickly, I want to tell everybody, this is Brian's YouTube channel, Mountain Bullion. I'm always erroneously calling it Mountain Bullion Entertainment. It's now been rebranded as Mountain Bullion. You can go to YouTube and put in Mountain Bullion, or even Mountain Bullion Entertainment. You'll get there and check them out, because you've been putting out a lot of great content. I know you've been partnering with another friend of ours, the Silver Hermit,
Yes.
and putting out some great interviews and conversations. So I'll encourage everybody to go subscribe to Mountain Bullion Entertainment. Check them out. Brian's doing a great job.
Well, thank you very much. And I would appreciate everybody checking it out. And I do hope to see you guys over on my channel, checking out some of our stuff.
Sounds good, Brian. Thank you for joining us today. Okay, I'm going to sign off with everybody, and I'll give you a call here in a few minutes. Okay, buddy?
Okay, sounds good. Thanks a lot.
Right.
Have a great day.
Thank you. And on behalf of our viewers, thank you. Thanks for everything you brought. Okay.
Thanks. Have a great day.
All right, guys, there we have it. Our friend Brian from Mountain Bullion Entertainment. Let's run out and take a quick look at the silver price. I'm nervous. Are you nervous? You've been checking during the live stream. Okay, let's just press it here. All right, 56 cents. We'll take it. Okay, we'll take it. If we end the day at 56 cents per ounce in silver, we're happy. Thank you guys for joining us. It is going to be a wild ride here over the next couple of weeks. Remember, volatility. It starts with the letter V. Okay, it can go up, but it can also come down. The big key is that the net at the end of the day, that the price of the metals will continue to go higher and higher. Okay. Thank you for joining me. Have a great day. Thank you to the moderators. Thank you also. I need to say thank you to channel sponsor, First Mining Gold, Canadian gold developer with 2 multi-million ounce gold development stage projects in Canada, gold in the ground in Canada, and Fortuna Mining, operating mining company with gold and silver operations in Latin America, gold operations in West Africa, and of course our friends at Pimbex. If you want to buy gold and silver or platinum group metals online, please check out Pimbex, PIMBEX.com. Have a great day, guys. Okay, thank you, and I will see you soon.